Welcome to the Maryland Mortgage Rate Weekly Mortgage Market Update for the week of December 1st, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Last week was a great week for Maryland mortgage rates. They actually moved lower. If you take a look at the bond chart on the screen, you can see that mortgage bonds rallied and broke through that ceiling of resistance, that line, that red line R1. They broke through that. We haven't been above that since October 15th, and that was a quick up and right back down below it. So moving through that is good news, and then we closed above it twice, Thursday and then again Friday, even higher. That's a bullish sign for mortgage bonds. That signals they could keep rallying higher. So with that in mind, we're going to recommend floating your Maryland mortgage rate to start the week to see if rates can move even lower. Now, if we dig into the economic news, the big one was OPEC had a meeting last week and they decided not to cut production. Seems crazy, ludicrous. There's a glut of oil supply. They decided not to cut production because they can't get along with each other. So oil dropped $6 a barrel, down below $68 a barrel. These guys are idiots. They can't balance their budgets. Their budgets are basically balancing on oil at $75 to $130 a barrel. Nigeria's budget balance is $120 a barrel. Idiots. Not even Russians' budget balances at oil below $75 a barrel. So these guys can't get on board to cut production, which is great for us because at the pump, the national price of gasoline dropped to $2.79. That's the low not seen since December 2010. And if you shop around, I just got $2.75 filled up my tank. So their dumb move is great news for us at the pump, price of gasoline dropping. And then we saw weak initial jobless claims come out on Thursday. They did spike higher. They went up 21,000 claims to 313,000. That breaks a 10-week streak of jobless claims being below 300,000. They haven't been above 300,000 since September 2014. So that was not good news. We'll have to see if this is just an anomaly. But if jobless claims stay above 300,000, that would be a bad sign for the labor market. Now, personal income and spending was also shown in that report, and it came out lower than expected. We only saw personal income and spending increase by 0.2%. We're expecting 0.4 and 0.3 respectively. If consumer spending does not increase, then the economy will slow because consumer spending is what drives the economy. So we'll have to see if that picks up going into holiday shopping. And then we saw the Fed's favorite measure of inflation come out last week. That's the personal consumer expenditures, or the PCE for short. That was very tame, only 0.1% increase from last month and 1.4% year-over-year inflation. So very low inflation. That's great news for mortgage bonds. And then we saw the preliminary reading on the third quarter GDP, or gross domestic product. That came out better than expected. Surprised us at 3.9%. We're only expecting 3.3%. That brings the yearly average up to about 2%. Now that's just okay, and that's not great, but remember, at the beginning of the year we were negative, so we have to average with that negative. So hopefully we can get still good, strong readings for GDP in the third quarter and then again in the fourth quarter. And then housing news. New home sales for October 2014 reported it up 0.7% to 458,000 units on an annualized basis. So that shows new home construction still doing very well. And then the median home price for a new home sale jumped to $305,000. That's up from $259,000. That's a great big jump there. And then inventories did increase slightly from 5.3 to 5.6 months supply. And then another report in housing was pending home sales for October 2014. Now they did come in slightly lower than expected, dropping 1.1% from September, but they still remain healthy. Year over year, they're still above the levels from last year. Now remember, pending home sales measures the number of new contracts on existing single-family residents that went under contract in October. And then we saw the Case-Shiller 20-City Home Price Index for September showed year-over-year 4.9% increase. Now that's down slightly from August, but we're right there in the sweet spot of about 5%. Robert Shiller was interviewed, and he stated that he is very optimistic on housing. He sees a 10% increase in home prices over the next 2 years. That's about 5% each year, right about where we said it's going to be. In the local news, the next first-time homebuyer seminar is coming up in Frederick, Maryland on December 13th. That's a Saturday from 10 a.m. to noon at the Hampton Inn. And then the next one in Laurel, Maryland is Wednesday, December 17th from 6 p.m. to 8 p.m. at the North Laurel Community Center. And then the next one in Towson is Saturday, December 20th from 10 a.m. to noon at the Sheraton Baltimore North Hotel. You can register for either one of those events, but give us a call in the office at 410-412-3319 or online, www.marylandhomebuyersseminars.com. I look forward to seeing you guys next week.